Today, marking the one-year anniversary of the VIX spiking 20 points, the volatility explosion, which led to exchange-traded products that let investors bet on enduring market calm, totally blow up. Bloomberg's Luke Kawa joining us with a look at what happened that day and what's changed since. Luke, 1 year speeds by very quickly. What have we learned?
So I think a lot of the main lessons we learn only make sense when you go through the context of how this came up. So I think this was an event where we learned just how much volatility is an undercurrent running through everything in markets. So, throughout this cycle, we've talked a lot about CTAs, risk parity, vol targeting funds as people that use volatility as an input to guiding asset allocation. What we had in this case were exchange traded products that made the subtext text. You could directly bet on market volatility, and mom and pop could do this. So what happened through 2017 was a combination of inflows and strong performance made these ETFs like XIV, the most well-known, grow in size, and it also meant the rebalancing needs at the end of the day were very well telegraphed. So we had a situation on February 5th last year where that these products are going to have to rebalance and buy a lot at the close. A lot of people front running that from 4 to 415. Absolute scenes. And you have a situation in which 3.6 billion in exchange traded products are helping facilitate and exacerbate the biggest loss in stocks we'd had since 2011. Some lessons learned, I think: be wary whenever you make a product and it grows to be too big of a size relative to the underlying. I think Mr. Cheer will have some words for that related to high yield and leveraged loans, and also that the short volatility trade still very much ongoing, but now still done by professionals. It's a good way to generate premium. It's a good way to have bounds on your expected returns in different market environments. And I think this episode really woke people up to a line I'll steal from Chris Cole at Artemis Capital. In the end, there's really only two strategies in markets: long vol and short vol.